Hi everyone, my name is Zee Razaq and welcome to the Next Level Finance podcast sponsored by Certax Accounting, and the aspiration is to unlock financial freedom, and I mean real financial freedom. Welcome to episode 3, and our special guest today is Prem, who is a SSAS pension corporate administrator, and he's going to give huge value. Get ready to enjoy it. Prem, thank you for coming.
Thank you for having me, Zee.
Fantastic. Prem's going to tell us a bit of his journey, and also, really important, going to give huge value to the audience. And as you all know, across social media, you're going to be enjoying this podcast, episode 3. So, Prem, we're getting into this. How did you find the food?
Food is good. You know, a nice veggie breakfast for a Tuesday afternoon is not bad. It's pretty good. It's pretty good. Pretty good. Always get full up with a lunch at Zee.
Do you know what? The hospitality is so important, and anyone who comes to our office, we do this as standard, and it's great to have you here. And what we're going to be talking about is first a bit about yourself, as we normally do, and then all the value that you create, which is amazing. And there's a big treat for you guys, because we're going to be focusing a lot on SSAS pensions and why they're so beneficial, and how Prem and ourselves try to help people. First bit I want to talk about, Prem, is your challenges. How did you get from wherever to end up running a SSAS pension scheme?
Yeah, it's a good question. It's a good question. I think it all roots back to sport. So in my younger days, I had ambitions to make it as a professional cricketer. Having been in the Leicestershire cricket setup for many years as a child.
Have to jump in here. Are you a bowler or a batsman?
Bit of both. So I would say I'm a bit greedy. I typically open the bowling and bat in the top 4. So I've
all-rounder.
Yeah, a bit of an all-rounder. So my journey probably started there. As a kid, the ambition was always to be a professional cricketer. It was, no one grows up to be in the pensions industry. It's a bit boring.
Who's your icon?
Who's my icon?
Who's your favourite cricket star?
I would say Sachin Tendulkar. Being from an Indian heritage, you grow up watching these cricketers, and it is always Sachin Tendulkar as a batsman. Grew up watching a lot of cricket. Cricket is where I wanted to go. I had good prospects of becoming a professional cricketer, and I think in life that was probably the biggest setback that I ever had. With being, almost there to being a professional cricketer and not being able to make it. I think that's then brought me the motivation to do what we've done today. The biggest challenges that I had was that, not being able to fulfill your dream because of barriers that couldn't be broken.
Give us a bit of insight. I know it's a bit deep. We're talking off air about this, and I think a lot of viewers probably don't understand some of the challenges people face, and everyone faces challenges.
Yeah.
Just give us a bit of outline some of the challenges that you faced that which stopped you doing what your dream was.
Yeah, I think the first one was obviously ethnicity. I think playing cricket in those years, 20 years ago, there weren't many Asian cricketers playing for England at that point. But it was quite a rude awakening when you get told the contract's not going to be on offer and you're not going to make it as a professional cricketer. I would say the biggest 2 obstacles was ethnicity and the politics around the sport. Not being able to make it through.
Do you know what? That's one of the frustrations, and some people underplay it. And you've had the Zee Razaq case we were talking about. And if your Zeem's watching, we've got you on LinkedIn. You're a bit of an inspiration to many people. And there is challenges, and I think people always get mistaken and all get nervous about it. It's just the way it is, and we sometimes have to challenge the status quo, because many people from all backgrounds don't like that. Because we all want to live in a nice way and try to see people achieve the best that they can. So that obviously shaped you a bit, and obviously gave you a bit of, as you said, rude awakening. How did you deal with that? Because this is the biggest sometimes frustration I have with people from our backgrounds. I say this, or from minority backgrounds. Sometimes it can affect them negatively, but it's obviously affected you in a positive way. How did you take that?
I think it sort of motivated me. At that point onwards, I went on to university. Initially university was a plan that I might have gone to university, might not have, and then when all this cricket dream sort of ended, I ended up going to university, studied management and finance, played cricket. Still played cricket then, not professionally, but for the university. And I think that sort of drove me, because it was almost like, well, I've had the biggest stumbling block in my life here, not being able to make it as a cricketer. So there's nothing really worse than that. So I ended up sort of going through university, worked really hard. Luckily got my degree at the end of it. And then I sort of thought back and sort of understood what I enjoyed at university. Studying finance at university, I wanted to stay in that arena. Unfortunately, being from Leicester, we had a big employer in predominantly the wealth management and the pension space. So,
just to interrupt, got a soft spot for Leicester. People follow me on LinkedIn. I went to university in Leicester. I was there for quite a few years. So I got a good relationship with that place.
Yeah, I think our first conversation, we spent half the call talking about Leicester and the places that are shut down and the places that are open. So we got something in common, I guess. I got that in common. But so then I was sort of walked into the pensions industry, particularly working with SIPs and SSASs, which are both sort of pension vehicles, which are common in the industry now. And I spent sort of 12 years at that particular business. Growing inside of the...
I'm going to just unpack that, because you mentioned two acronyms, SIP and SSAS. For people who don't understand that, what does the SIP stand for?
Self-invested personal pensions, and a SSAS is small self-administered schemes.
And there's obviously quite a bit of differences, which we'll touch on through this without getting huge detail, because we spend hours on that. But it's quite important because it changes the mindset and what you can do and what you can't do. And we're going to sort of touch as we go through your story.
As we go through it,
So you were saying about your journey with obviously wealth management.
Yeah, that's it. And so fortunately, I learned a lot of technical information around SIPs and SSASs, which stay with me. And then we sort of, when you work for a business of that size, the sort of personal element of it sort of soon disappears. So we always felt, where I personally added value was being personable, speaking to business owners, understanding what they're doing, understanding how a pension can help them. We then thought about, having a new proposition on the market, which is where intrusted pensions comes into it. Really, we formed that in pre-COVID, a week before COVID, in February 2020. It's one of those things.
How did COVID? Because I always ask people this when they bring this up, because COVID was such a big hit to everybody. How did it affect you? Because obviously you couldn't go out there and network and things like this. So how did you deal with it as an entrepreneur? Deal with COVID?
Yeah, it was difficult. It was difficult at outset. When you just sort of handed your notice in, and a week later you find out the world's going to close. You think, what great timing! And 2 weeks later, my wife tells me that we're pregnant. So, well, we're not we, but she's pregnant.
Everyone gets that.
So you end up thinking, oh, what a great time! You've given up job security to go out to follow your ambition and put the rights to the wrongs, as it were. And then sort of this happens. But that was another motivational factor, knowing that you've got the next generation of your own family coming into the world, and then you have that motivation to make sure that what you do is going to be successful. You don't have much choice at that point when you've taken the plunge, as it were.
So I'm going to unpack that, because that's quite so motivational, inspirational to the audiences, that you've had two major lifetime events, right? And they're obviously going to affect you. You've finished your career in corporate world, starting your own business, that's major in itself, and then you're starting a family, which is supposed to be, obviously these are all celebrational moments, but scary as well.
100%.
How did you deal with that?
I think at that point with COVID happening as well, the world was mad anyway, so that gave me some comfort, saying that actually, my world might be a bit more mad compared to everyone else, but the world was becoming a different place anyway. I think having a child at the same time was probably a good kick up the backside, as it were, to make sure that we have to make entrusted pensions a success. We need to work hard. You work with professional connections like yourself, to add value to these clients, and that's what we started doing from day one. I think COVID, although it was a hindrance in the first couple of weeks, afterwards, it became actually beneficial to us, because it meant that we could have 3 or 4 conversations with accountants, advisors all across the country in a day. To get 3 or 4 advisors in, 3 or 4 meetings in, physical meetings, is very difficult. So, we were able to speak to all of our sort of existing connections quite quickly in a space of a couple of months. And then the snowball effect took place. People understood what we're doing. We worked with some connections for a long period of time. They bought into our ethos. What we're trying to deliver in the SaaS space is very different to what you get from the traditional providers.
I'm going to just jump in there a bit, unpack what you said there. For me, that's one of the big things what I found with yourself is that most people act as blockers.
Yeah.
And that is just either a difference in mentality, but in the space that we're in, one of the key things is how do you find solutions to problems? And that's the constant way, because people don't want you to just tell them the problems. And they want a solution. They want someone they can trust and build. And I think from our conversations, you've got that bit about yourself that you can build that rapport with people, and that's why I wanted to get you on the podcast, because people don't understand this. This is so important, and this is the brand of people. Not everyone's got this.
It's true.
Just the way we're made, right? But if you're talking to someone who's someone easy to talk to and be able to help you and obviously tell you what you can't do, but tell you how you can do stuff and be able to think, change your mindset, that's value.
Absolutely. And I think that's where we sort of set ourselves aside, really, because a lot of the traditional providers in our space would typically give you a bog standard answer. If it doesn't sort of tick the box, it's you go find the answers, and we just think that that way of dealing is long gone. You need to help people where you can, especially business owners. Being a business owner ourselves, we get a lot of help from other connections, professional connections about our business. So it's the same we try to deliver with other business owners. How can we help them grow their business? Can we do that via SaaS? And certainly if it's not the right vehicle for them, we'd be honest and say, I don't think it's the right vehicle for you.
I think that's another, you're raising so much value, audience, again, it's huge value. For me, one of the things is being true about stuff, right? Having that transparency, having that integrity to say, sorry, that doesn't work, right? But you can do it this way, and having that passion. Because no one likes, I call it like a dead fish, right? No one likes someone just like, whatever. That's not what people are looking for. They're looking for people got that motivation, inspiration, because this is their future legacy.
This is
it's huge. It's one of the biggest assets, which blows my mind every day.
It is,
that we don't even get taught or educated about this, and it's one of the biggest assets. I think these experiences probably led to 3 years going quite quick. Right?
100%.
So when you started, obviously you had those challenges. How are you now, like 3 years in? How's the business looking?
The business has gone strength to strength. I think we're fortunate with the connections like yourselves and a wider connection all around the UK that have supported us from day dot. I think it's a testament also to the team that we have working with Intrusted Pensions. The amount of great feedback we get from clients. So that's in itself creates business because of referrals that we get from our own clients, which is an accolade in itself. So which has meant that the trajectory of the business is gone pretty vertical and very strong. I mean, our forecast of where we wanted to be in 10 years, we've actually achieved that in 3 years. So
amazing.
So we've done well. But again, it's not just me. It's a team effort. Put connections and our own employees, which are
I think you put in the nutshell is getting that whole culture right. And for me, it's a similar, some in my case, similar journey where you went from corporate to your own world or your own business, and you want to create that culture that fits what you want to be able to work in. And I think that's the empowerment that you can't get necessarily in corporate world, because you're in a different structure where other people are dictating. And I think we're talking a bit about this. I think this is so empowering, isn't it? It makes you want to be.
100%. I think that the analogy is, you're trying to turn the ship when the ship's moving at speed. You can't do that in a corporate world just because of the nature of the beast. But when you're talking to business owners at a micro level, you need to sort of step out of that. You need to be offering that personalized service, that one-to-one, having conversations in the evening like we sometimes do, or early in the morning. That's what it is, and that's what it means for business owners. And the corporate world is just not flexible enough to deal with that anymore. Hence why we took the took the risk and started intrusted pensions.
I think you've really explained that really well. The difference between that one-to-one, i.e. the micro relationship that you mentioned, and the macro strategy on how you're going to grow that and put that framework. And I think that's the biggest challenge large organizations have. They have a certain philosophy, culture at the beginning, their mission statement, and by the time they get to the end, it's something totally different. And the people like, I don't even recognize the business. I don't even want to work in.
That's
a lot of owners have that, you know that. I've met so many, and they're like, that was one thing we probably should have put some kind of controls by putting people that have our shared value. And I think that's a huge huge issue for businesses. I think I wanted to mention, because obviously your business is obviously getting successful, going strength to strength. What is some of the big things that you've helped business owners, and we're probably going to be thinking about commercial property. So how do you help, and some of the successes you've done for entrepreneurs?
I think it's first and foremost just understanding what the business is. I always find it interesting to learn about other people's businesses, because when you're doing pensions are fairly boring. You hear the stories of other business owners, you think, wow, that's a great idea, what a fantastic business. So initially it's just understanding what the business is and understanding what the problems are. I'm sort of, I would say the most successful one that we've probably had recently is a client sort of approaches through a referral, talking about doing a Loanback, which is a facility which you know really well anyway.
Just explain it to the clients and an audience and people like that, people who potentially may be looking at that kind of solution.
So effectively, Loanback's a facility which allows 50% of the fund to be lent back to the business. There's various sort of terms and conditions that have to be met for it to be an authorised Loanback, which you need to sort of understand by case, but it allows the pension scheme to effectively act as a bank to the business, so you become a bit more self-sufficient. You're not reliant on a bank, for instance, where interest rates are where they are today. So that's the sort of solution the client thought of before approaching us. And in that conversation, we actually found out that they had a commercial property in the business, which there was scope to potentially move into the pension scheme for various tax benefits, family benefits. There's a whole host of benefits we can talk through, but the initial sort of consideration was for the client and also the advisor was actually the Loanback route. And we sort of quickly turned that around. So actually it might be a bit more beneficial if the commercial property comes in. The effects are the same. A client would speak to us about a Loanback because it adds liquidity back into the business, subject to various terms and conditions. But a property purchase from the business has the same effect. So the cash goes back into the business, and the property comes into the pension scheme, and then you've got the whole host of tax efficiency in itself.
I'll unpack that, because Prem's really explained something fantastic, and there's a lot of info, and people are like, see, you always overwhelm us, right? And I'm going to try unpacking that. So some of the benefits Prem's saying is he's put cash from the pension into the company because it's bought the property assets. That's number one benefit. Number two benefit is when the property goes into the pension, you can charge rent to your limited company. Right? And that rent is obviously tax deductible, so you save corporation tax, and the rent goes into the pension tax-free because the pension doesn't pay income or corporation tax. There's a whole host of other benefits, but I think the other one that's really big and people don't talk about it's not actually just a tax benefit, it's also a liability defense. So if your company goes wrong, and I mean, we had Peter on before and watch that episode 2. It'll give you a bit of insight around why insolvency and how you rescue the business. But what this does is it moves the asset outside the business. So if the business struggles and you might have to close it, the asset is no longer part of that. It's in the pension. And therefore, the pension, as Prem rightly said, gives you future retirement benefits.
Absolutely.
And that's massive because you've got cash flow going into the pension.
That's right.
And it's topping your pension tax-free.
Yeah, and even more important is when you get to retirement, because you've got the rental income coming into the pension scheme, and that rental income can then pay you pension eventually. And
people always get worried about their retirement pot because they never think about what asset they're going to put in that's going to replenish the money that you draw down.
That's it,
And here you're getting money that's basically you could live off, and you're only going to get charged when you get to retirement age of what you draw down.
Correct. Yeah.
And there's one more benefit, as you know, the 25% benefit rule as well. So you can get that tax-free, which is either 55 or 57 years old now, depending on how you age.
Pension,
so huge amount of benefits. Taking Prem's thunder away, sorry. But there's so many things. I think one of the other things is, which you guys work with ourselves and many others, is about family legacy planning. So give me an example, because there was quite a proven example recently around how you've helped a family. So I think just sort of going back to that is obviously the benefit of the small supplementary scheme is you can have multiple members within a pension scheme, which allows family members to join a single pension scheme and pool assets together. So that's that in itself is a family tool, especially for legacy planning. And just coming on to that and to the example that you're talking about. So we had a recent case where unfortunately our first client passed away a month or two ago, which was very unfortunate, but it was coming. And the client was obviously, he was the one that was in business. He set the funds up. He had the investment. He sort of ran it himself by himself in the pension scheme. But once he passed away, his wife unfortunately didn't know what was going on. She needed a bit of cash fairly quickly. They were very asset rich, but not cash rich. And so the wife was sort of speaking to the advisors and speaking to us as to how do we extract this as quickly as possible. Now, obviously, we knew that something wasn't right with our particular client, so we put measures in place to make sure that in the event something like this happens, we can move very quickly. And that's what we did. The wife has now joined the pension scheme. She's inherited the husband's pot of funds, and now she can draw down funds as and when she likes. To the effect that it's nice to receive flowers from the family to say thank you for your hard work, and ultimately that's what it boils down to, knowing that you've helped a family in a difficult situation. I think that's the gratitude that you work with, don't you? And this is why I got Prem on the podcast, one of these reasons, because when you go to that level with people, and you have to, especially when you're providing a professional service, especially a bespoke professional service, it's all about the relationships and what level you go with people. And that's an amazing story, I've got to say. And obviously that's given the family comfort.
Absolutely.
And it's such a long journey, and people don't realize by having the right people beside you, it's not just helping you now, but it could help your spouse, your loved ones, and even your children, and even potentially the grandchildren, depending on your lifespan with them. And so it's such an important relationship.
Absolutely.
Isn't it?
Yeah. It's a benefit of sort of SSAS planning, to be fair. It gives you the ability to keep the pension scheme running in forever until the funds effectively run out, because next generations keep coming in. We've got pension schemes that are into their sort of second and third generation.
Wow.
The funds are still intact, still got investment in commercial property, and they'll just remain in situ. I think that's the biggest benefit. For SIPs it works a bit differently, as you know, but for SSAS, it's a trust-based arrangement, and it just continues until the funds effectively all run out.
We'll touch on that a bit later. It's very, very true. I think we sort of covered a bit some of your approach. You can quite clearly see how you build a relationship and that personalised rapport, and I found that when I've been speaking to you as well. I think one of the other things which is really interesting, how you guys and this is why it's great being able to work together on certain things, is how you build a relationship with other professionals. And I think in our industries across the piece, there's always this competition. For me, there is no competition, because in order to provide the best available service or try to help people, you have to have collaboration. So how have you approached collaboration? Because I got obviously my insight from you, but it'd be nice how you share that with the audience.
I think it's a matter of sharing knowledge, sharing technical knowledge. There's 3 directors at Intrusted Pensions, and between us, we probably have over 50 years worth of experience. So between us, we've got all that experience, and our view is, just share it with people. Share this with professional connections, and if it means that you're adding value for a client, that's all we want to see. Making sure that they're doing things the right way. If there's a solution out there that I don't know about, we'll go talk to professional connections about, is this a potential solution for any of your clients, or does it work for you guys? And I think that's where we really add value it's about sitting down and having conversations, something like this as well.
Yeah.
Sharing ideas. I think that's the way you've got to do it. And like you said, there's things that we've learned from you from an accountancy perspective that we didn't know. So I think having a conversation and spending time with speaking to people is always invaluable.
For me, it's about that journey. And there's different challenges that come up from that journey, and having a network, because everyone's got different knowledge. There is no one that knows everything, and you've got to be humble enough to know that. But you've got to be able to, in my profession and Prem's and many others, especially when you're providing a professional service, is be able to try to find the answers, have a strong network. And I think you've done really well on that. Also, I guess the other bit was, you mentioned earlier, is how you build relationship with business owners, because it's a big pot potentially. Before there was a limit of 12 million, but now there's unlimited. So that's probably people's biggest asset if they do it properly. The pension, and that my mind blows every time, because people don't realise, they don't treat it. It's bigger than your house. Right?
It's often the biggest asset for clients, and I think the key bit is just having that level of control over it. If you and with SSAS in particular, it's your name above the door, which is often the reason why people go into business. It's there under their ownership, under their control, and that ticks the box. And it's exactly the same for a SSAS. It's their own sort of pension vehicle for the family or for the business, but it allows them to interact with it, unlike other pension schemes where it's stuck away and it's invested, and you may not see it or it can't help your business. I think the biggest driver for a lot of business owners is this ability to use your SSAS pension scheme to help you grow your business. They interact really well. That's the purpose of the SSAS.
For me, it's a secure finance and investment fund, a family investment fund, that it should be used with the right people, with the right advice, right structures in that way. And I find that I've spoken to many people and been fortunate that speak about SIPs and SSASs without probably always the full knowledge or the way as an entrepreneur, because sometimes I say to people many times, I'm an entrepreneur that happens to have a suit that's an accountant, tax advisor, business advisor, just like yourself, right? And as a business advisor for pensions. But that's just one suit. We're people first. So we've got to understand what the people are trying to achieve and how we can put the framework within the rules to be able to do that. And that's the value. And it shocks me. I just get confused by people that don't understand that. And then they're like, oh, yes, there's certain things you may not be able to do in the way you want to do it. But there's always a solution that can get to. And I've always found one. We speak about
we do all the time. We do this often.
But that's the value driver, and that's what we want to show the world, because people start becoming, worried about it, restrictive, and they always look at the things you may not be able to do, but they don't look at the things that can be done that are going to be hugely beneficial in so many ways.
I think that what resonates is the key point you said before. It's the professionals that you have around you as a business owner or as a family. I think that's the key, because from our side, we can be trustees and administer pension schemes, but ultimately if they need tax advice, we'd rely on someone like you, because that's your sort of category. And equally, if they need investment advice, we'll have a financial advisor. I think getting that team right is key. Like you said, we don't know everything, you don't know everything, nobody knows everything, but it's having that confidence that who you're dealing with has a team that they can rely on if required. And we do this all the time. I mean, we've probably spent hours on the phone talking about scenarios at all times, but end of the day, that's I've learned so much from it, and you've learned so much, which we can then demonstrate and provide solutions to clients.
And for me, they're they're such an entrepreneurial tool, and for entrepreneurs, which we are, but when you're running a business, you're an entrepreneur, or you should aspire to be an entrepreneur, not just getting another job because you've left that behind. And this is a different mindset, and this has got to be one of the toolkits. I was speaking to someone even today, the last few days, around how you position this. Because it's got to be a step, because sometimes I speak to people, it may not be your first step, but it'd be one of the steps, and knowing when to do that step, because it depends on your circumstances. I remember I did the Sky episode on pensions, and I was asked around what amount should someone start with for SSAS? And I said that is very dependent on the person, depending on their mindset. You know, I put an average number of 100,000, for example, depending on if they're going to not actively be involved in it, because it's got to be something that's going to hit a business goal. Because as everything, there is value, but there's a cost, and it's weighing that value to the cost. Right. And normally the value, in my perspective, can weigh out far outweigh the cost, but that requires having a plan and having the right people to advise you what is realistic, what can you do, and the step-by-step plan. Because it may be a combination, you do a SIP first to build your funds up, because you can get low cost ones potentially, and then put in a SSAS, and then use that as a family driving vehicle. I've done that. And I recommend other people look at that, not to stop, it's you know, I haven't got a big enough business, or I haven't got enough. Everyone, because you know, you may be in business 20, 30, 40 years. I think it's a good point. I think making pension contributions where possible, you know, with cash flow determines is certainly good planning in itself. You know, as you know, it will reduce your corporation tax bill. I know you speak to clients about that already. But that in itself is a good piece of advice. You know, any amount of contribution that takes off your profits, but also you've got this for a rainy day when in retirement. You know, I think everyone forgets that. You know, me personally, you know, when we started contributing in our early 20s, you know, it was always often. I think people forget that, but the thing I think with the SSAS really allures me is the access to it, if done properly, and the cash flow and the tax benefits that you can get back from having commercial loan backs. There's a list is long, like gold bullion. You could do so many things that you can't really do in other pensions, because yours isn't a master trust. This is your family master trust normally. I'm going to talk a bit about the impacts to different types of businesses, because we have quite a different following. Quite a lot of entrepreneurs follow us, from trading businesses, property investment, property development. I'm going to start with property development businesses. You know, and it's good to talk this through, because a lot of people don't realise. I speak to some clients recently that are actually property developers. And for everyone, what a property developer is someone who buys property, potentially add value, and to sell it on. That's what we call a property developer. That's the definition for tax. Very important, because that's considered a trading business. Hope you're enjoying the podcast. Sorry to interrupt. We're just giving some bit more insight. Below this, you can actually subscribe to our newsletter or download some free guides, which we recommend. And if you feel you need more advice, please do get in touch. Our details are below. It's inquiries@certax.co.uk. And I'm going to let you get back to the podcast. And know because of the loan back and the contributions, just talk through some of the benefits of that journey.
So initially, obviously, you know, if you're a property developer and developing properties, you know, the profits that you make, you know, first and foremost, making pension contributions that we just touched on earlier reduces your corporation tax liability. So that in itself is good planning. You know, once it's in the pension scheme, you know, a lot of business owners or developers actually think, oh, that means I don't have access to it anymore. But I think that's where they're wrong with the SSAS. You know, with the SSAS, you know, you've got this facility called the Loanback, which we sort of touched on earlier, which allows for 50% of the value of the pension scheme to lend back to the development business, which can be used for any sort of trading purposes. So long as it's for trading purposes, you know, that could be something that we could look at. But again, every circumstance is different. You know, that's why
I think you've put a real good value on that, because you save the money on the way in for the contributions, because you can make something called an employer contribution, so it's not limited to your earnings individually, and that can go into the pension. You can even do something called unallocated contributions, really important, especially for property developers. So if you've got a big project, I was speaking to a client recently who were quite big property developers, and they had profits coming up to million plus, and I was like, well, depending on your circumstances and cash flow, you could make an unallocated contribution and get tax relief, and that is up to 500,000, and you could take advantage of the unallocated, and then you have to work out what you can allocate as well. And it works quite well with trading businesses, probably more than probably investment businesses we're going to touch, because you then can still have access to that money, but it's gone into a tax free zone, i.e. your investment fund called the SSAS pension. So that can be quite beneficial.
Yeah, it's powerful. Unallocated contribution is something that is allowable. You know, I think it's something that needs to be looked at on a case by case basis.
Absolutely.
It's not a one size fits all, because there's various bits that need to be looked at. from your side, from a tax perspective, also from our side. But like you said, the ability to make future contributions in the current tax is obviously very attractive, but so long as the circumstances allow you to do so.
I think you put in a nutshell, it's about the planning, understanding what the long-term picture is.
Correct.
Because a lot of this planning that we're talking about and giving ideas about isn't a short-term thing. So a lot of people make the mistake thinking it's a short-term. Your business is not short-term either, it's longer term. And if you don't develop 5, 10, 15, 20-year plans, you're gonna lose a lot of benefits on the way, and you're gonna regret it. And that's why I get people like Prem coming in, is just give insight how entrepreneurs are using it for best practice.
Absolutely. Yeah.
I think the other bit I was going to touch on, because I see so many landlords and property investors, right? And especially we've done a lot of planning to incorporate them because of the tax issues right now, Section 24, which is tax on interest. I'm sure a lot of people know that, right? Is how they use. You can also use your limited company differently to when it was in your own name, which you couldn't do. So you've seen a few like this where the property investors
got the portfolio of properties. I think the key is again probably more from your side to make sure that the contributions are deductible. From our side, we'll receive the contribution in the pension scheme, but so long as it meets your criteria. One of the main points with the SSAS pension scheme is you need to have a employer-employee link, so i.e. a limited company that sets up the pension scheme for the benefit of its directors. So if you do have a limited company and it's trading, like you just mentioned before, then only then do you have the option to set up a SSAS. If unfortunately you don't have a limited company, you can't set up a SSAS. And that's why it's so key for business owners.
And I think that the other benefits, we touched on a few, is because you've got a limited company, it's considered an expense, so it reduces your taxable profit. You save corporation tax. And that's quite big, because you can't necessarily do that if you've got buy-to-lets in your own name, because they have different rules for income tax and what is allowable and what's not. The other big benefit is, and people don't realise this one, is when you've got property, especially property investment, it's part of your estate for inheritance tax. But when you move the money out of the company as a contribution to your limited pension scheme, it's outside inheritance tax. And I know it sounds simple, but that planning can be huge. And then there's a potential, if structured correctly, to do a loan back and use that as bridging finance to put more deposit and buy more properties. But this planning is so important, and you've got to understand the people, and it goes back to the earlier part of the episode.
It goes back to what you said earlier about planning. I think it's not one size fits all. This strategy might not work for every business owner or every property developer. We need to understand the mechanics of it, again, from your side and from our side. Circumstances may not allow potential business owners to do it, and that's what we'll both of them probably say it doesn't work, but if it does work, we'll come up with a solution for it to work. The other strategy, and what's quite key, is you can't really own residential property in a pension scheme. You can own commercial property. So a majority of our clients own commercial property within their pension scheme. Typically, the trading premises. Just what you mentioned earlier. But having this sort of loan back facility, which we talked about, is a good safety net to know that if the bank suddenly say 15% interest rate, then you can become a bit more self-sufficient, and instead of paying interest to the banks, you're paying interest to your pension scheme.
And it's a double whammy, isn't it?
This is it. But this is where planning is really important, from both perspectives.
I think one of the things people don't understand is that, yes, you can't own residential property in a pension. Generally, there is some exceptions, and people will talk about those. But generally, majority of the time, if someone lives in a property, it's a dwelling, you can't have it. But by doing a loan back, the limited company, the SPV, fancy name for property companies that own, or limited companies own property, special purpose vehicle, that can own assets. And that can be whatever it needs to be, provided you've done it correctly. And I think this is the advice and planning, and you have to be strategic. And I've seen so many entrepreneurs, it's like the bulb just goes boom. And they were like, whoa, I can do a lot of stuff now. I can do flexibility, which they could not do. And they didn't have the finance or the fuel which is what the finance is, to be able to get to that financial freedom, hence the sign, unlocking financial freedom. This is why you have to think about all this. And I bore people to death on LinkedIn. I always work and a few other places because I'm talking about this stuff. And I think the other bit that I think people come across a lot, I run an accountancy tax advisory practice, which is a trading business, not obviously necessarily linked to property and means what it does, is there's huge benefits to that as well, isn't there? I think we were talking about it, is how you can fuel your pensions in good times and then use the pension to help you navigate through some bad times, by provided the business is still running as a good going concern. That means it's not having financial difficulties to a point that it may go bankrupt. But you can loan the money back and use it as a cash flow.
Correct.
And how can you beat that?
For cash flow purposes, I think you need to make sure that the ducks are in a row. So you and I both know that there's conditions that need to be met.
Of course.
But as pension vehicles go, this is the only UK registered pension scheme that allows this loanback facility, and that's what the key differentiator is between self-invested personal pension, which is a SIP, and a SSAS. SSASs were created with business owners in mind, as opposed to SIPs, which were formed for people that didn't have businesses but wanted this sort of notion of self-investment. The SIP market's changed drastically over the last sort of 10 years, I would say, from its formation in 91. I would say the self-invested personal pension is slowly disappearing because of the troubles in the SIP market.
I think you obviously got good insight in it. From my experience, what I've seen SIPs is that they can be useful, but the problem has become is how they're being used by the master trustees, i.e. the SIP provider, the platform. Because I think I was doing a speech on this in conference, and I said the SIP is like you're squatting on someone's master trust, and they were like, you shouldn't say that. I said then I had to change my wording to say, well, they can tell you to get lost because ultimately you're on their platform, whereas the SSAS is your platform. You set up a deed of trust, and you make sure, and that's quite important in the planning, by the way, as well.
Control, isn't it? I think you have that control on what happens to your pension, so long as it's within the rules, and that's what we're there for. Telling you what you can and can't do. We won't tell you what you should and shouldn't do. But having this perimeter set as to what you can do. But what's become very apparent is in that, like you said, SIPs still do have a place in the market. Like you used it properly in terms of in infancy, you set up a SIP, which is a personal pension effectively, and you grew it to a point that you thought I can do some self-investment with this now, and then you moved it into the SSAS. But the early formation of SIP when in its sort of infancy was always to allow full self-investment. But there's been a lot of troubles in that market in the last 10 years, which has meant a whole host of SIP providers have either gone out of business or they've consolidated to much simpler businesses, which I think will fuel the popularity in SSASs, because now you suddenly initially you have these two vehicles that allow self-investment, and actually one of those vehicles is very limited self-investment, and you've got this vehicle here which is a SSAS, which still has all the flexibilities that a business owner requires.
I like how you put that the analogy about the vehicle. I'm thinking about the handbrake being pulled up, and this is what's happening. And I get entrepreneurs going nuts, and they're like, they don't understand. So like for example, a little tip for a SIP is like, if you've got a little bit of payrolling and you don't want to do an employer contribution, SIP can be good because you can do the 2,880, get like a 25% uplift, irrespective of what money you pay. And so there's little benefits, and children under 18, you can do stuff with SIPs. And so a lot of people use that to help build funds up, and then thinking of educating them to get on the SSAS. So I think there's so many ways of using the tools, but it's about advice, getting the right people around you.
Planning around,
I was just going to talk about, and I think some of the key things that I get asked a lot and give answers, and I know you give me quite a lot of insight on them as well, so I'll get your views on this. There's different, obviously, impacts that we talked about the SSAS, but one that comes up a lot is when it's a family tool and the legacy planning, especially for before and after 75 years old, because 75 years old in the legislation is quite an important landmark moment. So give us just your summary in your view of the before and 75-year-old impact.
Yeah, so the current rules and the current legislation is if a member dies pre-75, then the fund of that member moves to the beneficiaries tax-free, which in itself is a great benefit. And if demise was meant to happen after 75, which none of us can control, then those benefits are taxed at the recipient's marginal rate. But the key benefit is you're not forced to take those benefits after age 75. So the beneficiary could easily step into the shoes of the person that's deceased and inherit their fund within the pension scheme, so it's still outside the estate, and draw down as and when required. It's not a matter of here's a fund, it's all paid out to you, now pay us your high rate of tax on it. You've got the option to basically say, no, we'll step into their shoes and we'll come into the pension scheme, which is the core benefit of a SAS.
And I will add a bit of value to that, because that was answered amazingly well. I can't give a better answer myself on that. And I think the big challenge I think a lot of people don't understand is when you're on like a SIP and in someone else's platform, what normally is what's been happening is that even though that is available for people with SIP, in practical use, what happens in the real world is they just don't want to know you, and they say, here, have your money, you're the beneficiary, we don't want to carry the SIP on. Whereas a SAS, you can have it in your master trust, written in the deed of trust or that, and that would then obviously be fine. And what happens is then they get hit by a lot of income tax because depending on how old they are and how much they're earning, and that could be quite sizable, so you lose a chunk. And you also, the other benefit of the SAS compared to SIP is you bring that money back into your estate. So that cash, if something happens to you, goes part of your inheritance tax calculation. Whereas when it's in a SAS, it can go through multiple generations, and this is what's been happening. And it's just an amazing tool.
Yeah, so I think a good example is one of our oldest SASs was formed in 1980.
Wow.
So like a year after the formation of SASs, and that's the one that's gone through multiple generations, and that's still there. You've got the grandchildren that are the core members, and some death benefits that are still in the pension scheme that are taken off as and when required. But that's the case in point, isn't it?
I think you put the thing, and I think the bit I wanted to just have a quick chat about is one of the biggest issues of pensions. When I pay pensions to people, they're like, Zee, why are you talking about pensions? And the reason why they say that is because they think it's that dull, boring thing that you don't need to worry. Personally, I'll go forward. I think they're quite sexy. I hope you're understanding that from what I'm talking about here, right? It's because the stuff you can do is mind-blowing. Right? I think one of the bits that people don't realize, the SAS protects you, and I've got personal experience of this when unfortunately my dad passed away. His pension, what happens with a normal conventional pension, and predominantly with most of them, I've put SIPs and SASs outside this, is that when you pass away, you have the dreaded annuity. For me, this, everyone's going to think Zee being controversial here, but I think it's one of the biggest scams ever, because when one of your parents passes away, they lose half, and then when the other parent passes away, they lose the other half, and they might have never even used it, and they may have 2 million in the fund or a considerable amount. That's another huge difference, isn't it?
Yeah, it is. I mean, it depends on the circumstances. I mean, I do think annuities, again, not a financial advisor, can't give advice on them, but it is a bit of a gamble. Sometimes it's seen as a gamble because you give this sort of money up front for a guaranteed level of income, which reduces on first death and reduces again on second death. Obviously, every annuity is different, but typically that's the structure of it. But circumstances is what drives it.
I think, Prem, you said a really good point there. I think when the annuities were set up, right, especially when they were quite prominent, depending on when they were, the rate was higher. Right now, the annuities rate is much lower. If you go in the 90s, it was probably over 10% per year. So if you had $500,000 fund or 100, $250,000, you'll get $500,000, you get 50 grand. That's a lot of money. Now it's like in the floor, it's like 3 or 4%. I've not looked at the numbers recently, but I'm sure they're in that ballpark. So if you've got £1 million fund, you're only going to get hardly anything, or 30, 40,000 on $1 million, and God forbid something happens, you wouldn't use that up, because it would have taken you 25 years
to pay it out,
to even think about it. That's assuming that it hasn't been growing while you've had it. And then half it's disappeared, so your spouse, whether it's the husband or wife, whoever goes first, will have half of it left, and they will get that percentage, and then the children get nothing. So for me, it's like, if you logically just sit back and think about this, the majority of people, I can't see how that can ever work.
I think it's circumstances. I mean, it's, I think there might be certain clients that it might work for. I'm not saying it doesn't work for everybody. I just think if you're someone that wants to control, you have kids, you've got this sort of generational planning to it, then it probably doesn't work, because if you want to pass on to the generations, and the annuity doesn't allow, well, most annuities don't allow that to happen. But I guess it depends on circumstances.
Yeah, I think you've been quite nice there. I probably personal experience, I'm not a big fan. I think the other bit that we're probably, our last major point is, how many people can you have in a SSAS? And this is quite a big topic.
Yeah. I think it's one of the it's a big advantage as to the numbers that you can get into a SSAS, and that's up to and including 11. So that's the maximum amount of people that you can have in. And in comparison to a SIP, which are typically one member arrangements, where if you're looking to buy, say, commercial property with someone, you'd have to have two separate SIPs to buy a percentage of the commercial property. In the SSAS, it works very differently, because you can pool assets together. There's a notional fund split to account for which member has what percentage of the share, and you can buy the property together. So it allows up to 11 members to come in, pool their assets to buy a commercial property, which is quite important if it's directors of a business, i.e. 3 or 4 directors come in, buy commercial property, and equally family members. So family members pooling together to buying commercial property, which again, through a SIP, it's possible, but it's not designed to be doing something like that.
It's much harder finding a SIP. I think the multiple SSASs is just quite mind-blowing, because what I find is a lot of people, you have a husband and wife, and you may have good friends that also got husband and wife, and normally they don't tend to put it always in the same SSAS, because they want the legacy for their children and no issues. They can have 2 SSASs, and what you can still do is use them both together and pool and be able to invest in funds and this, or invest in properties and things like this, and then or fuel the business. So there's so much flexibility depending on how you do it, and the advice and the structure. And I think it's quite mind-blowing, to be honest. Every time you have a problem, there is a solution for it. And I think this is the beauty, where if you've got that empowerment, you can do stuff. When you haven't got the empowerment, it becomes harder, right?
This is it. I think having your trust deed and rules, which allows, so long as it's within the perimeters, and it works, you can create solutions. Whereas sort of the other arrangements, I think you struggle with around what you can and can't do, or should I say, what you're allowed to do and not to do.
I think that's, and I mentioned it before, and I'm sure our guys are going to put this on all across social media. They'll probably like, Zee, you mentioned this again, but I can't emphasize this enough, that the beauty of a SSAS is that, provided the legislation allows you to do it, you can do it, provided you've got the right support, the right accountant, tax advisor, the right corporate trustee, because it's an end-to-end. And I find that's where a lot of people struggle, because they don't understand the end-to-end, right? And they then put limits in the rules, because either lack of knowledge, and I think it is normally that, or they're trying to do something that is not what it was set up for. And that's the balance.
I think you're right. I think you need that flex. You need that flexibility, and I think certain vehicles, you struggle to do that because of external factors, i.e., regulation, corporate opinions, corporate views, and I think that becomes a bit of a hindrance, especially for business owners. The other sort of driver, which is we haven't touched on yet, is the recent abolishment of the lifetime allowance.
Massive, huge.
Which we talked about quite soon after the news came about. But
I did a little YouTube on it, but it's good that you brought it up. How are you finding that's affecting people's decisions? Just for the audience, there was a lifetime allowance of 1,073,100, and if you had 11 people, that was limited, if my maths is right, about 11.8 mil. But now there's unlimited. And how are you finding, how expecting people's decisions?
I think that the planning changed. So we're seeing, clients that were touching that number would often stop contributing because of fear of going over the lifetime allowance because of the tax charge that applies after that amount. So we're seeing a number of clients that hadn't contributed for a number of years starting to contribute again. Obviously, there's certain rules around the lifetime allowance, and as to the 25% tax-free cash that you're entitled to is only up to the previous £1,073,000, depending on circumstances. But even away from that, if you think about the inheritance tax play of moving funds from a profitable business into a tax-friendly environment, where it's away from inheritance tax and capital gains tax within the pension scheme, that planning has now come out the woodwork, as it were, because the lifetime allowance is on its way to be abolished.
Yeah, and I think I'm a bit of a critic of the government. People might have seen me on a few episodes on Sky TV and all the different areas. I talk what I feel my experiences are, and this is not a political debate or whatever. Everyone has different views, but I think this was a good decision, and it was wrongly consumed by our friends in the mainstream media to say, oh, this is for rich people. No, because you don't realize if someone's done successful, they've done their business, they're trying to build legacy, why should they be prohibited? Right? They're following all the rules. And I just don't understand why we do that. We were losing doctors, high net worth individuals, because they were like, it's actually detrimental for us to carry on because of these thresholds, which is silly. The other bit is the annual threshold also went up to 60k as well.
So again, another plus point to be allowed to put extra funds into the pension scheme.
Absolutely. And have you found people are going up to that? Because it's only started?
100%. I mean, profitable business, if there's surplus cash in the business, then it's a non-brainer, especially considering if you don't need it for cash flow purposes as well. A lot of our clients have sort of drives to buy further commercial properties, which sometimes with where commercial property pricing is at the moment, you need a substantial amount of money to be buying the right type of commercial property. So this ability to add £60,000 a year or through the annual allowance is allow those clients again to almost fuel their value in the pension scheme, and it added to that the multiple members that we talked about. So if you have a number of directors, a number of family members, it won't take you long to get to the amount required to buy your dream commercial property in the pension scheme.
Absolutely, and that's been one driver for our business, and a lot of entrepreneurs I'm seeing is they're normally family owned, owner managed businesses like husband and wife. And now it's not 80 grand, it's 120. And we're obviously excluding the unallocated contribution aspect, but if you do that, it's so efficient, it changes the income, and it's about time because of inflation. 40,000 is not the same as it was before, so it had to go up. I think these were sensible measures in the budget, and I think for any party, if the Labour Party do come and reverse it, I think they're going backwards.
I think that's one thing we can't control. The political parties and what might be a future legislation.
You can't.
I think we've got to understand and make the most of current legislation, and maximise what we have now. There's no point speculating what might happen. I mean, pre the budget, no one knew that the lifetime allowance was going to be abolished, and whether it's going up to 60,000. So these things take you by surprise. But that's again comes back to the planning. You have that support network around you to make sure that you've got the right advice from various parties, to make sure that when legislation does change, you have the right people around you to give you the right level of advice to say, this is what you need to do.
I think you well put it, and I totally agree. I always say that to people. You can't plan for things you don't know about. You can only plan, because a lot of people say, oh, jobs become really hard to plan. I'll go, you just got to roll with it. There's always going to be challenges. Listen, Prem, this has been amazing. So thank you for all the value. We'll obviously have Prem will be in the posts and the links on our post across all social media. And if you reach out, you can always reach out to him or myself regarding this. And I hope you got huge value. Please do like and comment below regarding this. I'd like to thank you again, Prem, for coming down.
Thank you for having me.
Amazing. Thank you.